Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. Syria's new government has told business leaders it will adopt a free market model and integrate the country into the global economy. That's a major shift from decades of corrupt state control. Prominent Syrian businessmen welcome signals that the economy would be open to investment, vital to rebuilding from widespread devastation after 13 years of civil war. The head of the biggest Syrian business lobby, Bassel Hamwi, told Reuters on Tuesday in Damascus he had been informed by Syria's interim economy minister, Bassel Abdulaziz, that the stifling customs system would be done away with, fulfilling a major demand of traders and industrialists. Stabilizing and opening up the economy is seen as economists as crucial to encouraging desperately needed fresh investment and the potential return of millions of Syrians, including many from the educated middle class who fled the war.
It will be a free market system based on competition. Every person registered in the chamber can import the goods he wants, of course, and put it on the market within a specific exchange system. The exchange rate is not clear as it depends on the supply and demand. There are no exchange companies today that determine the exchange rate. At the present time, any merchant can sell in any currency, until it is organized and there are available exchange companies, and a clear exchange rate. The currency platform should be cancelled, in my opinion, and the Minister of Economy assured us that yesterday. This is a demand of all merchants and industrialists. They, Syrian businessmen abroad, will be the most important contributor to the development of Syria, with the expertise they will bring back with them.
In South Korea, opposition leader Lee Jae-myung forced through a highly contested budget Tuesday in a show of political clout. That's as Lee seeks to build momentum for another impeachment bid against President Yoon Suk-yeol in the coming days. Bloomberg reports the main opposition party's one-sided downsizing of the budget by $2.9 billion was among the factors cited by Yoon when he made his shock declaration of martial law last week. The Democratic Party's revamped budget cuts back funding to Yoon's office. Yoon's party mate, Prime Minister Han Duck-soo, expressed disappointment over the passing of the downsized budget. The budget is one of the only items of draft legislation that the president cannot veto. As the political chaos continued, markets started to stabilize close to a week since Yoon's surprise move. The Kospi benchmark stock index closed up 2.4% for its first gain since the crisis broke out. The won was largely flat against the U.S. dollar at 1430.25, having last week hit its lowest level against the greenback since 2009 in the aftermath of the global financial crisis. India's new central bank head Sanjay Malhotra says he is wary of killing the golden goose as he looks to reverse India's growth slowdown and keep price rises in check. In one of his few public appearances ahead of Monday's announcement, Bloomberg reports that Malhotra told tax officials to keep economic growth in mind and avoid saddling businesses with overly large tax demands. As the head of India's central bank, Malhotra inherits the management of an economy beset with a dual challenge of rising prices and slowing growth. Last month, the RBI said the economy expanded at a 7-quarter low of 5.4% between July and September, putting pressure on the bank to reduce what other top officials in Modi's government have said are overly high borrowing costs. The Princeton-educated revenue secretary and 3-decade veteran of India's civil service is the second career bureaucrat in a row to lead the Reserve Bank of India, replacing Shaktikanta Das after 6 years in the post. In China, former chairman of the state-owned bank China Everbright Group was jailed 12 years for embezzlement and bribery. Official broadcaster CCTV said Tuesday that Tang Shuangning was arrested in January, part of a wider wave of prosecutions of senior officials accused of financial crimes. A court in the city of Tangshan found him guilty of taking advantage of his position at the state-owned bank in seeking convenience for others in jobs and loans in exchange for illegal payments. The court said he had accepted illegal property with a total value of more than $1.5 million. Tang, who retired in 2017, was expelled from the ruling Communist Party in January. His successor at Everbright, Li Xiaopeng, was also suspected of graft, expelled from the party, and removed from public office. U.S. President Joe Biden plans to block the proposed sale of U.S. steel to Japan's Nippon Steel when it formally referred back to him this month. Bloomberg reports Nippon Steel has outlined commitments to reassure the union, including pledges for job security and investments in U.S. facilities. However, union leader David McCall cautions that the Japanese company could still import steel from its international mills, potentially displacing local production.
Certainly, when we've had discussions with them, there's been nothing that would assure us that there's a long-term viability in the operations. And so that's our number one concern, is about what the future livelihood of our members would be, and our sustainability of being able to produce the products that we need in this country, controlled by this country.
Nippon Steel's $15 billion takeover bid also draws criticism from both President Biden and President-elect Donald Trump. The proposal is scheduled for review by the Interagency Committee on Foreign Investment in the U.S. later this month. Meanwhile, Trump said anyone investing $1 billion or more in the U.S. will receive fully expedited approvals and permits. This includes, but is not limited to, environmental ones. U.S. President Joe Biden urged President-elect Trump to discard Project 2025, the controversial conservative plan to overhaul the government. The project advocates a sweeping elimination of environmental regulations and a crackdown on programs to boost diversity in the workplace, which the project argues are broadly illegal.
I pray to God the President-elect throws away Project 2025. I think it would be an economic disaster for us in the region. Most economists agree the new administration is going to inherit a fairly strong economy, at least at the moment. An economy going through fundamental transformation that's laid out a stronger foundation and a sustainable, broad-based, highly productive growth. That is my profound hope that the new administration will preserve and build on this progress. Like most great economic developments, this one is neither red nor blue. And America's progress is everyone's progress.
In remarks at the Brookings Institution think tank, Biden said his administration had embraced an economic approach that sought to grow the economy from the middle out and the bottom up to the advantage of the middle class. He acknowledged that American workers were still struggling with inflation and high housing prices. He faulted Trump's first administration for failing to develop a plan to deal with the COVID-19 pandemic, adding that Republican moves to slash taxes, offshore jobs, and destroy unions had put the economy in a difficult spot and worsened the U.S. fiscal outlook.
I know it's been hard for many Americans to see, and I understand it. I just trying to figure out how to put three squares on the table. But I believe it was the right thing to do. Not only to lift America out of economic crisis caused by a pandemic, but set America on a stronger course for the future. And we did that. I believe the only way for a president to lead America was to lead all of America. And I believe the economy I'm leaving at the moment, and others could do better than I did. I'm not saying it was perfect. But ends up at this moment the best economy, strongest economy in the world. And for all Americans, doing better. So we got a lot to do, and I'm leaving the presidency, but I'm not going away. Bad news for y'all. Because I think we got to bring this country back together.
A very large wall will separate Donald Trump's family business, the Trump Organization, from the U.S. government. That's according to the 40-year-old president-elect's son, Eric Trump, while in Abu Dhabi on Tuesday from a Bitcoin conference.
I don't think I would, do business directly with the government. I think that probably is a conflict. You saw 4 incredible years of prosperity and safety, followed by 4 years under the last administration of absolute hell and chaos. And people are already starting to see the pendulum go back, and it's going to go back very quickly as he stops the war, as he creates peace, and he bolsters economies really all over the world, starting obviously for us, most importantly for America, because we're Americans, and that's who he's out there supporting. But America really leads the way, and it's going to lead the Gulf as well. We've been in this world for a very long time, and obviously I'm separated from government. I have no role in government. I want to have no role in government. I'll be ethically very smart and very responsible, as we did, and we'll work on great deals, and we'll make sure that there's no conflicts, and we'll have those signed off by the best legal teams in the world. There's a way to do both, and there's a way to do them responsibly, and obviously I'm committed to doing that.
During his first term, Donald Trump retained ownership of the Trump Organization, but placed control of the sprawling business empire in the hands of his son Eric and Donald Jr. The bulk of the Trump Organization's business is in the United States, although it has significant business interests overseas, including in Saudi Arabia and the United Arab Emirates. Bitcoin, the world's biggest and best-known cryptocurrency, fell 5% to $95,000 at 21:03 GMT on Monday. Bitcoin is down 7.1% from the year's high of 103,000 hit on December 5. The drop in Bitcoin and other cryptocurrencies like Ether came on the same day a Bloomberg analyst said the U.S. Securities and Exchange Commission will reportedly reject 2 spot Solana exchange-traded funds, or ETF, applications. Tech giant Google unveils its new generation chip that can drastically speed up computing. We have this report.
Google says it has cracked a key challenge in quantum computing with a new chip capable of almost unfathomable speeds. The tech giant says it can perform a standard test in under 5 minutes, one that would take one of today's fastest supercomputers 10 septillion years. That's vastly longer than the universe has existed. Google says the results lend credence to theories that quantum computing taps into a multiverse of parallel universes. Dubbed Willow, the new chip has 105 so-called qubits, the building blocks of quantum machines. They are super fast, but also very error-prone, and can be upset by something as tiny as a passing subatomic particle. Now Google says it's found a way to make them more reliable, and says it can also correct errors in real time. That's a big step towards building a practical quantum computer. Google hopes such devices could one day deliver huge advances in fields like AI and medicine. In a blog post Monday, it said that, even under ideal conditions, it would take a regular computer 1 billion years to get the same results as Willow. The processors are being crafted at a new purpose-built facility in Santa Barbara, California. Rival firms have focused on building chips with more qubits, but Google says improving reliability is the key to delivering a workable system.
Coming up, we'll explore whether gold and crypto are financial lifelines or dangerous gambles for retirees in today's volatile markets. Stay on BNC and follow the money. Welcome back to Follow the Money. The World Bank cut its growth forecast for the Philippines this year, but remains optimistic about the country's medium-term growth potential. It also warns of risks from trade disruptions and geopolitical conflicts. World Bank economist Gonzalo Varela says the 2024 growth forecast is lowered to 5.9% from 6%. This revision is due to the impact of recent storms, which resulted in lower than expected growth for the third quarter. The agriculture sector struggles this year with climate-related events, including El Niño and La Niña, affecting output and livelihoods. Last week, economic managers also lowered the country's growth target from 6 to 7% to 6 to 6.5% to reflect these challenges. With inflation still elevated and the peso struggling against the dollar up until recently, 2024 is a year of tough choices for high net worth individuals, especially retirees, navigating rising costs, and volatile markets. To help us make sense of it all, we're joined by Mr. Rex Mendoza, CEO and President of Converge Financial, one of the largest distributors of investment funds in the Philippines. He's also former CEO and President of Philam Life, with decades of expertise in wealth management and financial planning, making him the perfect guide for this discussion. Rex, good morning, and grateful you could join us. Hi, Rex.
Hi, good morning, Raine. Pleasure's all mine.
Okay, thank you so much. Again, good morning. Perhaps you could quickly go through the quick profile of your clients at Converge Financial and their main concerns when it comes to investments.
Well, the profile of Converge is quite wide. We have 60,000 plus clients already, and this is just on our own and main platform, but we do have connections with GCash and other digital platforms. Huge chunk of this would be mass affluent, but there is a good selection of high net worth individuals and families that we do take care of, and we've actually served a few generations of these families already.
And we will be talking more about succession planning in a moment. But first, inflation's wealth divide. The latest BSP data shows that inflation is still hovering around 3.3% average for this year from almost 6% last year, disproportionately impacting consumer spending. How are affluent Filipinos adapting their personal finance strategies to protect their purchasing power while maintaining growth in this high-cost environment?
Great question, Raine. I guess it's really a challenge for many high net worth families. However, I always have to say a poor economy or a very challenging investment environment is not an excuse for not doing things right. And this is where you really separate the rich from the struggling in our economy. In fact, they really focus on maneuvering and changing their approaches because they know what's about to happen. So in answer to your question, there's a big shift towards luxury real estate. I think a lot of people have seen how prices have moved up in this area, while the overall real estate picture is challenging, looking at middle income to lower middle income. But the luxury will always be tops, no? But on top of that, they also look at marketable securities, and because stocks and all of these other assets are challenged, I think the main focus now will be in bonds. They want to capture the high interest rates that are there before the cuts are going to be made, and I guess we expect most of this to happen in 2025. So if they can lock themselves up in higher grade, higher yielding bonds, they will do so. But that doesn't mean, that they're not investing in stocks. There are undervalued, great performing stocks where the real net incomes are not reflected in the prices. So basically, they are positioning in these particular issues very early so that when recoveries do happen over the long term, they are in a position to take advantage of that. Then we see this whole thing about diversification in what we call alternative assets. We now see shifts towards global funds, thematics like tech, AI, consumer feeder, and we're also looking at the rise of alternative investments like crypto and even art. We just had an auction last week and, this weekend, and the prices are really getting high. So all of these actually put the rich in a position to become richer because, inflation has its way of getting prices and asset prices magnified, whereas, unfortunately, people who don't have anything on the side, people who don't have investments, are really going to get hit because their incomes are going to be hard hit with the inflation that we're talking about.
Well, thank you for that assessment of all the markets out there and all the asset classes. But I also have to ask you, we've seen the peso weakness and we know about wealth transfers now with the peso hitting 57 to the dollar in the fourth quarter. What is your take on how high net worth individuals can manage overseas investments and remittances to family or luxury imports without bleeding cash flow?
Well, I guess that's the luxury of the rich these days in the Philippines, because there was a time when you really need huge amounts of money to be able to invest in foreign investments, thematics, global funds. Now it's very easy. I mean, even local institutions have provided linkages. We have private banks. Even the local banks have a private banking unit these days. And you can even have insurance companies and asset management companies doing feeder funds. So through different alternative investments, like even insurance, the high net worth have access to this. But again, the bottom line for me, Raine, is this. The rich and the affluent know that the peso will always be a weaker currency. So I guess the more intelligent thing to do is to make sure that we have an allocation towards dollar assets. That's a firm allocation. And I guess for the moment, it's safe to say 30 or 40% of your marketable securities and investable funds should be in dollars. Because obviously with a slide in the peso value, you won't be able to make much in real dollar terms. So this whole thing about diversification and making sure that you invest in stronger currencies will be a must. Because can you imagine, with the way things are going, and then you have the peso sliding at about 10, 15%, you almost erase all the yield you've been making on the local front. So
Right.
There has to be a real bet on stronger currencies like the dollar.
Understood. Meanwhile, in terms of private wealth, there's also growing chatter about wealth tax proposals targeting ultra-high net worth individuals. How should affluent Filipinos brace for potential regulatory shifts? And what asset reallocation strategies could they explore right now? Are there tax regimes that maybe government could consider to make it more of a win-win for both the taxpayer and government coffers?
Well, for me, Raine, I have my own personal view on that. I don't think legislation will go this particular direction. If ever, it will take such a long time. Quite frankly, legislators will not do anything to harm themselves or maybe the benefactors they can protect. So unfortunately, that's my view. But even as, there can be a long-term horizon for that, I think that affluent families and individuals will take this very seriously and do some positioning right now. I guess there is a way of, of focusing on the fact that the rich will really have to go more towards control rather than ownership. I guess for most part, we've always seen the rich focusing on what to own. However, there is a big shift right now to control and not exactly owning. And this is through the use of trusts, through the use of big level, high amount insurances. When you do these things, you're able to transfer with the least of possible leakages. Sometimes it can actually get a bit complicated, but that's not exactly the case now. Even as private banks do this on the local front, people are now having access to trust agreements, family constitutions where, I guess succession is very important. I always tell friends, without succession, you don't really have success, right? You have to make sure that, number one, you pass on assets with the least amount of leakages. But important, and more important than that, is the capability to create the wealth. I guess that's what we need to see in the second generation. It's not just money and assets getting turned over to them. It's also the capability of producing more and creating more wealth. I guess that goes with the entire package.
Right. Rex, I still wanted to be able to ask you or consult you about ESG, perhaps, as well as healthcare. Of course, these are prime concerns of the ultra-wealthy. But perhaps because of time, we'll have to ask you one last thing. Is there an underrated financial move that affluent Filipinos must make or should consider today, not only to survive but thrive in the coming days amid the uncertain economic landscape?
It's something that we advise most of our clients, Raine, and this is it. It's totally segregating a portion of your wealth to a base that you can call your emancipation fund. That base will have to be tucked in a very safe instrument, a guaranteed position that will give you an interest inflow that can take care of your security and freedom of choice moving forward. And as I say, this is underrated because a lot of high net worth will usually put all of their money in their businesses, put all of their money in their enterprises. And that's the reason why, you know, the real take of the next generation can be tough because the money of the first generation is still within the business. But if you have a segregated fund and you can enjoy your life with that, then you can really focus on preparing the next generation because on your own, you're already good. I mean, like, let's say you set up something that will pay you, like, let's say, 1 million pesos a month, and you're going to be happy with that. Yep. So no matter what happens to the business, no matter what happens to the economy, you will be getting that million on a constant basis, whether you need the full amount or not. In which case, you won't have to meddle with a second generation running your business now. You cannot, hamper them and get into new assets like crypto and the like because you are safe on the side. You have your own money moving forward. And you're not because you have made sure that this is set up in posterity. I mean, it is going to be a function of that base creating that money no matter what's happening to the economy.
Safety fund, emancipation fund, and a segregated fund for the future. Always an attractive idea. Mr. Rex Mendoza, CEO and President of Ramfor Financial, a pleasure to see you again, and thank you so much for joining us today and sharing your invaluable insights on wealth strategies for the high net worth individuals and retirees. Thank you so much, Mr. Rex.
Thank you, Raine, and good morning to everyone.
And before we go, we'll leave you with this thought from physicist Albert Einstein. Compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Billionaire News Channel, always on top.